Yo, what's going on, believers? Happy Monday. We want to do a weekly outlook. Sometimes I'll do it before the market reopens on Sunday. Sometimes I'll maybe have it available right as the market is opening. But ideally, for me personally, I need enough information to be able to really feel confident in it. And waiting until Monday morning, a little bit earlier than this now, maybe like a few hours ago would have been the best time to be honest, because everything's already moving. But yeah, I'm just do a little weekly outlook here real quick. So, first disclaimer, there you go. Not a financial advisor, right? I'm a belief advisor. Okay, I advise you to get some belief. As far as economic calendar is concerned, just we're gonna scan through this real quick. The highlight that I want to make is that it's the end of the month. So Thursday, I believe, will be the last trading day of the month. So you can see Thursday is the 31st of August. That will be the last day of August. So Friday actually begins September, as you can see here. So every time a new month begins, I try to keep that in mind as well. So I'll be looking at the monthly chart here for this outlook as well, but it really be more important. Well, actually, yeah, now to just kind of get a feel for how the month is going to close across the board, and then also to see projections for what may, take place in September based on, right, what's already been going on this year. So that is a scan through. Again, the biggest thing is NFP week, as it being Friday, the first Friday of the month, right? Is NFP week as well. So NFP week, typically by Wednesday, I want to be done with the bulk of my trading. So I will tend to have very low hanging fruit, bread and butter type of draws on liquidity is what I call it. Basically, a potential destination that price could get to. And so now to the charts. So I did say the monthly chart. So let's start there. So as far as the dollar is concerned on the monthly chart, you can see once it dropped below, this was April's low here. This candle here was April's low. Or this low down here was April's low. Once it dropped below that and wicked its way back inside the range, and now we see bullish momentum so far for August. So this high is of interest to me, which is the high from May. All right, so it took out April's low, and now I'm looking to see if it wants to come up to May's high. And as you can see, really just moving sideways here, but it's still enough movement intra-week, intra-day to be able to take advantage of it in my analysis. And so that's the monthly perspective. We'll be looking for May's high as a draw on liquidity for next month. Not saying I'm expecting this week to get there, even though it could, but that'd be the draw on liquidity for next month, more than likely from the weekly. So there's actually that same level, so that high from May, but just seeing it from a weekly perspective, right? So this is that same exact level here, and so we want to see again maybe this week or one of the weeks next month reaching up for the high here, the liquidity resting above this high. Okay, daily. So to keep it real simple, right? These are my high time frame top down analysis, just looking for potential destinations that price may reach to. I don't care about where it closes, right? So this high, because of how it opened with the gap higher and it closed high above all of these highs, right? I'm anticipating this high to be taken out unless it bumped into some sort of resistance, right? That's going to send us lower. And I am kind of anticipating some sort of retracement lower in dollar. And that's because of the red line that it just traded above, which if you look over here, some buy side liquidity rested here. And it's also, if you look at the cursor, worked its way above these highs here. So it's taking a lot of buy side liquidity from the daily right perspective. So some sort of retracement, potentially closing a body in his range because this is a volume imbalance. So there's wicks in his range right here. Let me just zoom in a little bit so you can see more. So there's wicks, right? You see the wick here and then a tail here. So there's price action in this range from the close of this candle to open in this candle, right? But there's no body, and the bodies typically represent the volume. So this is just indicative of there being a lack of volume here. And so what I usually like to see is a body close inside that range. Now it doesn't have to be the first body that touches it. This could do what it's doing here, trade into it, reject, close, and leave another portion potentially, right? Like let's say, for example, it closes right where it's at, right? So then what that does is that puts it where now the volume balance is right from the closer there to the closer here. And so it'd be that range. But until this day closes, which is going to be this afternoon, I have to just keep the whole range identified because what this does in respect to it isn't official until the candle closes. And so that's what I got for the daily chart. This actually might be um, the only type of retracement that it does see. Like if it isn't able to get below this range here, right, and it starts to run higher, it could potentially just make that run up to that May high, right? So these are things, again, I'm just weighing the possibilities. Nothing is 100% guaranteed in this business except losing, right? That's the only thing I can ever guarantee anybody is that you're going to lose. But the people that survive the early stages of taking losses and learn from their losses are typically the ones that make it big in this business. And so I'm just trying to follow in their footsteps. And so that's the Dixie for you, right? So raw liquidity short term is the high from last week, but anticipating some sort of retracement lower before that. This whole week could be a retracement week. I just keeping that in mind from the monthly perspective that the whole week could be a retracement, and then next week, as the new month has already started, could mount then that rally to go and take out those highs. So again, like I said, just weighing the probabilities of different things playing out. And of course, I'll go into my lower time frame charts, and I'm at certain times of the day, I'm weighing what I'm seeing to really qualify. Okay, is it higher probability now of it doing one thing over the other? So it's always a constant if this, then that analytics going on. And so, okay, boom, so that's dollar. Now, monthly chart, E-mini S&P futures. So as far as the monthly is concerned, the drawn liquidity was July's high. As you can see, has not gone that way so far for the month, right? Dropped down into this inefficiency here, right, on the monthly chart, wicked almost to the midpoint. Just want to zoom in so you can see that it did not actually engage the midpoint. It was actually a good sign for bulls. As you can see, there's a little bit of a gap there between the tail and that white line. Like it does not touch it, right? And so that's usually a good sign of bullishness. If this month closes out above that range, right? Potentially above this candle's low here as well, above July's low, I feel really good about next month making that push up here if those conditions play out. But again, I need to wait for um, Thursday's trading to finish, right, for the month to end, and then I'll be able to analyze this monthly candle and use the close of it where it closes, like I said, in respect to this wick here and this range down here to help me qualify the increase of probability of this high being taken out or the decrease of probability of this high being taken out. Onto the weekly. So the weekly draw is actually this 2 weeks ago's low, which was the one that failed to reach that midpoint. So if it is going to drop lower, this is an area that I'm super interested in, right? But where it's at right now, the month's about to end. It's pretty much come to a point where it seems like, right, got the impulsive, got a little retracement to a support level, so potentially mounting another rally back up, right? So it's neither direction is completely um like solidified in my mind, right? It's a soft bias that I have right now as far as everything is concerned. I got to take it day by day, especially like I said, as a month is ending. Typically, as a any time interval is ending, you'll see some sort of return back into the range, and that's what leaves the wicks and tails, right? Because prices stretching higher, like last week, it was running higher. It reached some sort of resistance area up here, and then it rejected from that high back into the range and closed down here. So it was bullish. It was a big black candle from right down here all the way up here before rejecting lower and closing like this for the week. So I just got to keep that in mind on every time interval, especially the monthly, right? That it could just be some consolidation or just working within the range already that is established for the month so far. So now, like I said, weekly draw is going to be this low, but also just keeping in mind the midpoint of this wick as well as an area of interest. So I can just to identify that, because I will be more so focused on this one this week. So 4449.5. All right, 4449.5. So 4449.5. Okay. And equities opens in about 12 minutes. So I'm trying to speed this up a little bit here. Top center. It's just gonna be Grossman premium wick. And then it's a weekly. So I'm put that like that. Boom. So I always like to annotate my levels too. So I'm not confused about what they are right there. So boom, got that. Set up there. Now I'll drop to the daily. So as far as the daily is concerned, the immediate low hanging fruit draw was Friday's high because it dropped down below a previous day's right low, rejected back into the range. So I'd be looking for this high to be taken out. That's why I'm saying like I wanted to wait for more information because of all the conditions I've already outlined. But sometimes because there's a need to inspire liquidity into the marketplace while I'm being cautious and want to weigh out a lot of different relationships and things that I'm seeing happen when candles close. There are people that are seeing stuff like this and it's exciting them to jump into this buy, anticipating that, yeah, it's bouncing off of support and that they may catch the low that, right, or a new low or a higher low, right? And let me just show you what I mean by that. So like when the market is trending up, typically just see it like this. We got that low, the initial low, then some sort of high, it'll retrace lower, and then it'll break this high, right, make a higher high, then it'll come down and not breaking this low, right, make a higher low, and then right, eventually continue like that. So that would be an uptrend. So that's what I'm saying. So people are looking at this as a higher low, right? You got this low, you got the high, and then you come in, you print this low, and now it's pushing above this high to make a new high, right? And then of course we'd be expecting some sort of retracement back down once it makes that high, and then continuation through that high, right? Really just making this diagram, but in price structure, right? So as far as that's concerned, I try not to let um, volatility or movement in the market inspire FOMO, the fear of missing out. That hasn't really got me anywhere in my journey. Typically, just gets me beat up, losing money, losing confidence, and what it was that I was supposed to be doing, or losing confidence in myself and my ability to follow the rules that I've laid out for myself. Right. So little things like that can be detrimental. But so as far as again the draw on a daily was Friday's high, it's already reached that. So well done S&P. And so next level, of course, right, but would then be from the weekly this midpoint of that wick, and then of course as you can see above there, this white dotted line here. And so for this layout for my weekly outlooks moving forward, where I'm thinking price is going to go, for where areas of liquidity exists that I feel like price will be reaching for eventually, they'll be annotated with a white dotted line. And then the thicker white dotted line above is the immediate draw above. The thicker white dotted line below is the immediate draw below. And that just kind of like how it's set up. Of course, as you can see, this low is higher than this low, but this low I don't view as an area where price was at the time indicating that it will go and run this low. Because like I said, what happens here is it takes out this candle's low here and it rejects back in the range. So the price action that happened here made this the draw on liquidity for me rather than this low. And so while obviously this low would need to be taken out before this low down here is taken out, And of course, I'm going to be watching this low, especially if it confirms as a swing low. I'll definitely be watching this low, but I'll still be anticipating that if price gets to and below this low, that it'll be making its way to this low. And so that way, within that range, even though it's not the largest range, it's like a 15-point range or so. I'll be able to play scalps within this range, right? Using this low once it is broken as resistance, and then this is my target. If I'm not already involved in something, right, from this side up here, that is that move lower, or even if it's all the way up here before it starts to then, make that shift back lower. So, little things like that. But now just to do the due diligence with the other indices. So you see from Nasdaq here, monthly and efficiency as well, right? But it did, as you can see, the difference. S&P didn't even make it to the midpoint and reject. Nasdaq actually traded through it, but is rejecting right back out of it. And so if I was to measure out this midpoint, so 14,906 is the midpoint. And as you can see, it is back above that midpoint. So it closing back above 14,906 would actually be a good sign for bullish momentum going into next month, like for S&P, right? That July high is a target that it never got to. Same thing with Nasdaq. That July high is a target it never got to because of the way that it closed above June, right? So failed to get to that high, retraced because I can't see this as nothing but a retracement yet. With all of this bullish momentum, one down candle so far, so retracement, find support, rallies from support. All right, so like I said, depending on where it closes, especially above this 14,906 level, definitely will, on a monthly perspective, be expecting for September to potentially reach up into the high from July. To the weekly, and these levels should not be shown on a monthly. So let me go ahead and do this real quick. And that shouldn't be shown on this time. That's from the daily. All right, so then from the weekly, so immediate draw for the weekly is actually the low from last week because similar fashion, right? So it traded above the high of the week before and closed back within the range. So when I see this signature, um, that makes this a drawing liquidity for me. Just keeping it, like I said, super simple, right? It's a potential destination that it may want to reach to, especially since it never made its way down to this weekly low, which was a draw once this week closed after breaking this low and this low here. This was a target. But then we instead, all right, get a candle that runs its high, rejects back in the range. So now I'm interested in this level. And of course, similar fashion though, anything below this level, that range, right, is a potential scalping range where this could be resistance and then this would be the target. And so that's the weekly for NASDAQ. Now on the daily, so in similar fashion, right, Friday's high was going to be the draw, the low hanging fruit, bread and butter draw. It's already reached that, right, before market even officially opens for the futures. So that is all right. That's fine. I'm not the type of speculator or analyst anymore that experiences a high level of FOMO, because I understand that these things happen every month, every week, every day, and it's not going to stop. So I just gotta stay objective, not let my emotions become a part of this at all. And so that's Nasdaq for you. Now moving down to Dow Jones, and then I'm gonna get on to my trading session for the morning, and we'll see at the end of the week how everything plays out. But so for a monthly, similar thing, right? We're looking for July's high to be taken and never reach there. So you can see dip back into the range of July, right? Inside candle so far. Going to the weekly. So with the weekly, so with this dropping below previous week's low and rejecting back in the range, right? That definitely makes this high now a draw on liquidity as far as the weekly is concerned. And then this from July's low is actually an area that's of interest to me now. I believe this is actually just based off of the monthly or no. Trying to figure out why is it bold like that when it really, I don't see a reason why it would be bold. This shouldn't be bold unless it's from the daily. Hmm. And it is from the daily. That shouldn't even be identified. So whatever I was thinking when I did this, I had to be off about it. And then also this is also I'm really like familiarizing myself with this method of doing it. So I will be making tweaks along the way, but just letting you all know about the shift, if you will, my high time frame way of analyzing the markets, trying to make it a little bit more simple so that even like a 10-year old will be able to understand what I'm talking about. So this is that monthly low. So I'm not sure why I put this as a draw. That doesn't belong there. So the only area that actually um, is here. So right here, this is valid because from the monthly. So this high from last week is valid as a draw because traded below this low, closed back within a range, right? So that high now becomes of interest to me. There's buy side resting above here. Anybody that was, selling, anticipating a run of this low and potentially that low, the stop losses are resting above here. So there's liquidity up there. From the daily, so this is that weekly high here, but the more immediate from the daily perspective was Friday's high. So then that is why you see the thicker dotted line there. And actually, what's crazy is as far as below, this is really the only one that I have that's valid, that's lower. And then as you can see, it did close outside of the range of this inefficiency here. So I'm actually going to now relocate it to here because this is also an inefficiency down here, right? And so it's already stabbed into it once, twice, three times before leaving. So this whole area here would be like the draw lower. And so in similar fashion though, like this one will close below, but then you do still see some sort of retracement higher. But this is lining up with the dollar taking out a high and retracing lower, right? But with heavy bullish momentum in dollar and this smashing through here, I don't think it would take long for it to get from the bottom of here to there. So that same thing, or this would be like a resistance point, and then this would be my target. That's a nice, 600-point range there. Even waiting for something like this to happen. Even if I don't engage with it at all until it closes below here, that still offers me a 600-point range to take advantage of when the time comes. So that's where time is important and having a wait for a high probability setup to present itself. Every day doesn't need to be a trading day, but every day, in my opinion, does need to be a learning day and a day of like putting myself to the test and making my analysis. And so it is now actually opening time. So now let's go ahead and look over here real quick just to look at how I open and then how I like to get this layout set up. Let's see this price range, what is time window here between 8:30 and 9:30, and see if this can kind of give me some sort of indication of the direction to be taken for the day. So I always mark up this range, and as you can see from the open, right, yellow line is my weekly opening price. It was really in the consolidation until, like I said earlier this morning at 7, it finally broke out of that consolidation and traveled above these highs here. So with dollar also in consolidation from the open, yellow price, and the different levels I was watching from last week. All right, so it's also in the consolidation. So I'm not interested in anything today. Like I don't care if dollar does eventually shit the bed, runs this low, and S&P pumps up 50 points, right? Like I don't give a damn because that's just more data for me to analyze for the next move. That's gonna make. So I'm not missing out on anything. If it's not high probability to me, if it doesn't line up with the way that I'm doing things, then it's counterproductive for me to try to do anything. Now I have been focused a lot more on the 1 minute chart, and so just go down to the 1 minute real quick and get the S&P on the one here. And so I have been, like I said, using the 1 minute a lot more. And so I guess I'll do a little quick 10 minutes here, just see if I can identify some areas that make sense as far as where it's at. So obviously, right, as we've seen, it's pushing higher now. So it's pushing above highs that it's made over the last, handful of days. And actually, if I go out to this layout here, and I go to the S&P, right, the same ticker symbol here. So I go to this here, again, as you can see, right, from this is a daily over here on the right. So there was Friday's high, and then the next, couple of daily opens and closes are actually way above up here. So it's a lot of range in between there. And on the lower time frame on the hourly, um, there is inefficiencies along the way, right, of that push higher. So that's where my attention would be on a lower time frame inefficiencies that could potentially be speed bumps for price to make its way up to those highs, right? Areas where price may retrace or begin to consolidate at. And so just keeping that in mind, there aren't really any resistance points except for on the hourly, right? This low here would be the closing of this inefficiency. So let me go ahead and come over here, and then I'll identify that level with, and just do a horizontal ray, and then just do the default, and then we'll leave it like that. Actually, no, I like this darker blue for areas I'm kind of expecting price to get to. This or like a white, um, like dotted line as far as where I believe it'll go to. Typically, I'll put this color blue for an area where I'm expecting to take something off the table as far as take a partial on the trade. But so as you can see, it's really just, very energetic, pushing higher, right? Since it at 7, it pushed above that range. As you can see, just that momentum followed through here as the equities market has officially opened 4 minutes ago. And so, like I said, not much lower time frame areas to use, but the continuation is more than likely to anything until it starts to break down below the support that it's creating. So when this candle closes, there may be this inefficiency between the low of this candle and the high of this candle. They could act as support. This one is already confirmed, right? Between this candle's low and this candle's high, that inefficiency is already confirmed, and that inefficiency was created as it broke above this range here. So I do like this inefficiency as far as I believe it'll hold more weight if it's broken than this one would. I think that it could break this inefficiency, trade back into this range here, right? Potentially just down to the lower one, or even run the lows because they left equal lows, right? And there's other inefficiencies down here. So it could work its way down here somehow before continuing, but it's looking like it really just wants to reach and fill in the inefficiency now, which, like I said, is just fine. I started my day a little bit late as far as a lot of times I don't expect a lot on Mondays. I'm really trying to get myself out of like assuming, because a lot of times when I assume that Monday is going to be, just a lethargic, slum, like slow, choppy, or something like that type of day, I'll tend to just kind of sleep in and not really like do the normal due diligence that I'll do throughout the rest of the week. But like I said, I'm definitely working on that internally as far as like, all right, dude. Every time you say Monday ain't gonna do shit, Monday give you a run for your money. So it's like, just let me just right become a robot, make it a routine, do it every time regardless of how I feel. And so, yeah, but with that being said, everything has been recorded now. My outlook for the week for a dollar, E-mini S&P, NASDAQ, and US 30 or Dow Jones. All right, so we'll see how that plays out. Shout out to the believers, shout out to the dreamers, shout out to the homies that inspire me to be better each and every day. I love you, I appreciate you more than you know. Let's have a great fucking week.